Everyone's been looking for a turn. Did we finally get one on the monthly? Let's go. We'll get back to the SPY monthly chart in a moment. But first, let's look at a heat map of the 500 stocks that make up the S&P. And what we see here is about the only green on this chart are utilities and pretty much staples. Now, this isn't the best look when defensives lead the pack. Now, let's remember this as we dig into SPY monthly. The first thing we notice is that this reversal candle was engulfing and it was a drop of 4% in April. Could this be why MMs were loading up on those defensives as maybe they think that we're going to be heading lower? I'm sure everyone is wondering what's next from a monthly perspective. So let's dig a little bit deeper. The saying sell in May and go away doesn't exactly exude market strength, now does it? But if we look at these moving averages here, we see that they actually all went to the upside and finished a little bit higher on the month. So until we see follow through to the downside, this is one down month in a row. But being that it happens as we are entering a seasonally weak period, as I mentioned earlier, and being that this month completely engulfed the prior month, even though we held this 5 exponential moving average, if we lose this area, then we're likely to tag the 13 EMA next. If I add the fib retrace to the chart, we can see which areas we are most likely going to reverse. Again, I'm thinking the likely play over the next month or so is likely lower due to the reversal candle that we just saw, coupled with a seasonally weak period, not to mention an epic run after the last 5 months prior to this one. Now, of course, we could have a correction through time, but normally, even if we were correct through time, we would have seen some type of retrace that would have been a little bit deeper. And being that we only spiked the 24% retrace area, even if we moved a little bit lower into this 38% retrace area, which coincides with 484, if we bounced here, say, starting in June, holding this 38% retrace area would be super bullish. And when we look at this, this is only, a little bit more than 3% away. Now, a 50% retrace down into the 472 area isn't out of the realm of possibility, as a 50% retrace is sort of normal. But at that point, we're probably no longer talking about some type of corrective wave with an ABC, and instead, we're likely to see something that would be a 5-wave down like we saw last July. Now, that correction took some time, so when I talk about 472, I'm not talking about next week. I'm talking about maybe in a couple months. Now, the last area that would be a likely turn for bullish is coming down and spiking into this golden pocket area and then reversing. Spiking into this golden pocket area means that we probably hit the 455 area before reversing. But according to Elliott wave rules and my 5-wave analysis that shows that the bull trend has been going on for the last 16 years, we can't close below the completion of this wave 1, which is likely in the 460 area, or something else is going on. If you want to see the analysis I did at the end of January, then I'll post that at the end of this one. If we look at the MACD histogram this month, we see really the start of momentum barely starting to wane here on the monthly. But again, 1 month doesn't set a trend. The Qs, the NASDAQ top 100 looks pretty much identical, so moving on. Looking at the small caps, last month when I saw this candle, I was hopeful that now that we saw momentum break to the upside, that this month we'd see follow through. But instead we had an engulfing candle this month and we reversed back into range. Was this nothing more than a UTAD with a Wyckoff distribution? Now, there's a lot of support in this area, so I'm hoping we do nothing more than form a higher low before moving higher. But only time will tell. Last month on the US 10Y yields, after seeing what looked like a doji candle, I was hopeful that we would go ahead and start moving lower. But instead, we only ripped higher, as April was up over 10%. Are we on our way to 5%? To me, everyone's expecting Powell to be hawkish tomorrow, so is that priced in? And he'll actually be dovish tomorrow during Q&A? Let's face it, this week we already had one bank failure and the market shrugged it off. Is he going to really want to stay higher for longer, knowing if things start to fail, then he is cooked? And is inflation in the 2s really a problem? Now, the VIX, it put in a heck of a tail candle this month, but closing above this 200-day moving average isn't exactly bullish. And is this a sign that we are going to see more volatility ahead? I'll go ahead and post that January video here. So you can see how I explained why I think we're in the final leg of a long-term bull trend now that we closed above January 22's all-time high. As that's all I have for now until the next video, and we'll see you then.